Hello and good evening. Thank you for joining us this evening for our last wildfire preparedness workshop. And this workshop this evening is called Understanding Homeowners Insurance in High Fire Risk Areas. So if you're joining us, then it looks like we already have some people that have already joined us in our other webinars. So welcome back. Thank you again for being here. So we're going to move through the program. If you have any questions during the program, please locate your chat feature there. If you're on a desktop or a laptop, just hover over your menu bar and you should see the word chat with a little bubble. If you click on that, you can go ahead and put in your chat, your question or comment and that you would like an answer to, and we will do our best to answer it. You could also raise your hand if you'd like, because this is a webinar format. We are going to be disseminating the information and we will do our best to go ahead and answer your questions. And so with that, we'll go ahead and get started. So again, thank you for being here. Our presenters this evening is Bill Murphy, who's a fire captain with the Santa Clara County Fire Department. And then we also have Peter Mesa, who is an associate insurance compliance officer with the California Department of Insurance. And as we move through the program, we'll refer to California Department of Insurance as CDI. All right, and Captain Murphy is with us, and Peter, you're there too. There he is. Okay, so Peter, why don't you go ahead and give us a little bit about CDI, and then we'll switch to Captain Murphy and we'll move on from there.
Sounds good. So good to be here. Thank you for the invitation to the Santa Clara County Fire Department, and always nice working with you guys. Very professional and very helpful, and always getting information when we're dealing with issues. But let me just mention the California Department of Insurance is led by our insurance commissioner, Ricardo Lara. There are 1,400 employees. We oversee over 1,400 insurance companies. We license over 450,000 agents, brokers, adjusters, and business entities. We receive over 170 consumer assistance calls. So, I mean, our hotline is busy. Now, we investigate more than 37 consumer complaints, annually. These are averages, and we recover more than 84 million a year for consumers. You're going to see that there's going to be an amazing difference between 2019 and 2020, though. I'm going to give you some astounding numbers. So it's great to be here. Thank you for the opportunity.
Okay, thank you, Peter. And we'll go ahead and move on. And Captain Murphy, there you go.
Hi, good evening, everybody. Bill Murphy, Fire Captain with Santa Clara County Fire Department. I'm going to go through my introductory piece here pretty quick, just because I know that most everybody that typically signs up for one of our webinars typically signs up because they've got a specific question that they're trying to get answered. So more often than not, people don't really want to listen to me talk for too long. So I'm going to get through this so that Peter can get back to explaining the insurance in high fire risk areas, and we can get to the question and answer period. Santa Clara County Fire Department serves primarily the west side of the county from an emergency response perspective. We're a special district formed under the California Health and Safety Code, and we were established in 1947. Again, from an emergency response perspective, we're serving primarily the West Valley communities, as well as all the unincorporated areas up to the county line at Highway 17 and Summit Road. Our Board of Commissioners is the Santa Clara County Board of Supervisors. In addition to the 15 fire stations on the west side of the valley, we also provide fire prevention services for what you see in that picture is the blue area, which is the entire county, as well as emergency management, leadership to the county's 911 communication center as well. Now, as far as fires go, and one of the reasons that wildfire has risen to the top of everybody's list is over the last several years, and in particular last year, we witnessed the worst fire season in California history. And honestly, it wasn't a surprise because we had been dealing with hotter and drier weather for several years leading up to 2020. But when you look at the chart in front of you, 6 of the fires on this chart occurred last year. If I were to dive deeper and look as far back as 2015, the vast majority of the fires on this chart occurred since 2015. And the slide in front of you is showing the most destructive fires, which means these are, it's measuring fires by structures destroyed. The SEU complex, which isn't on this slide, is actually the 3rd largest fire in California history by size, by acreage burned, and that occurred on the east side of the county last year. Next slide. When we look specifically at Santa Clara County, the various colors you see here represent fire hazard severity zones. Santa Clara County has about 550,000 acres of areas that are considered wildland areas and are designated and in one of the categories of fire hazard severity zones, either moderate, high, or very high. And of those 550,000 acres, approximately 200,000 acres of those are what we call dual jurisdiction areas. So they're areas that lie outside of the boundary of an incorporated city, but within the boundary of a fire district. So in those dual jurisdiction areas, if there's a wildland fire, you would get a response both from county fire resources as well as CAL FIRE. And that's to ensure that, you know, we're providing the best response possible, particularly in light of the severity of the fire seasons we've seen. Next slide. Now, I mentioned we've been, you know, 2020 wasn't that much of a surprise. I think the fact that it was set records as far as California's fire season goes was a little bit of a surprise, but we know that we've been experiencing hotter and drier weather for the last several years. Unfortunately, it's a trend that's continued this year with this year, I believe, being our 3rd driest year on record since records have been kept. When looking at the a report that's produced by the state out of the Climate Assessment Office, the last version of the report that was produced was the 2018 climate assessment. And what that has said is essentially if the weather continues along the path that we've seen the last several years, we should expect that the area burned in California is going to increase by up to 77%. As an example, the fuel moistures that we're currently seeing on the west side of Santa Clara County and the Santa Cruz Mountains, which historically have been very resistant to wildfire because of the strong marine coastal influence. Those areas under the weather that we've seen have continued to dry out. We're now seeing some of the lowest fuel moistures in those areas that we've ever seen. And that was also one of the reasons that we saw such active burning during the CZU complex just over the hill from our county. So I mentioned both the SCU complex and the CZU complex. CZU complex being just over the hill to the west of us in San Mateo and Santa Cruz counties last year. And then the SCU complex, which I mentioned was the 3rd largest fire in California history now, which occurred to our east, well east of the majority of the populated areas of the county, up around Mount Hamilton. But what these fires have shown us is the need more than ever to have strong partnerships. And that's one of the reasons that we're here tonight. And I wanted to thank Peter again for being here to speak to our communities about insurance in high fire areas.
So it's great to be here. Thank you once again. I'm going to talk to you in regards to understanding homeowners insurance in high risk areas. And so I think it's important. But let me start by just a little bit more of a review on the department. So we're the largest insurance protection agency in the state. We regulate auto insurance, homeowners insurance, life insurance. We regulate auto warranties, travelers insurance. There's a lot of lines that we insure. So somebody has to regulate the insurance industry, and we regulate not only the insurance companies, but the agents and brokers. We're the largest market in the United States, and actually the fourth largest in the world. So you can imagine how important this market is here in California. A lot of other insurance companies actually come to us and look for us to lead. So we're doing all kinds of things. You can see at our website, different things that we talk about. We have a climate smart insurance product database. We have so much information there you can look at, and I'll be talking about as we go along a little bit more about our website. But it's $340 billion industry. Somebody's got to do it. Let's talk about shopping for insurance. I think this is important. So this is kind of a big deal. Remember, these are basic things, but they're important. Take time to look around. Perhaps you may go with one insurance company. You may find that there is somebody else that may be more competitive. The prices vary, of course, from insurance company to insurance company. They're not all exactly the same. You might consider buying your auto and your residential from the same insurance company. Sometimes you get a discount for doing that. Consider raising your deductible. If you have $1,000 deductible, you can raise it to $5,000. Sometimes you can even go higher than that for homeowners. It depends on how much you want to, assume as far as your risk. So improve your security with alarms, with deadbolts, and these are things that can actually, help you reduce your premiums. We encourage you to go to our website. Our website has a comparison. I believe it either is the 30 or 50 largest insurance companies, and you can actually go there and you can, run a comparison of premiums for the insurance companies. So you basically enter some basic information, and you can get, just kind of essentially an estimate of what the insurance companies are, what they're charging. So the different insurance companies are there, and you basically can get it's not a quote, like I said, it's just a comparison. So we encourage you to get there. And also, if you can't get online, you want to give us a call, you can call us at 927-4357, Monday through Friday, 8 to 5, except holidays. So I also like to encourage folks to take a look at our consumer complaint study. So it lists the insurers by their complaints, justified complaints. There's a ratio is based on the amount of exposure they have. So some have they write a lot of insurance because they're larger insurance companies. So you may see a higher number, but you want to see the ratio where they're at. And so I like to call this the report card of insurance companies. But you can see there, it compares, goes back to 2017, 2018, 2019, and it shows the different, companies. So you may see some companies like number 18 that has 2 million policyholders, and so, so you got to remember it's the proportion to complaints to the amount of business they have in the state. So, insurance companies don't like to get dinged. They don't like to see when a complaint comes in. So, but this is public information. You can go in there and once again, go to our website. And then if you have any problem, give us a call at that same number. Once again, quick tips. Make sure that you shop around, fill out application completely, read your documents thoroughly, make sure you understand everything about it. Don't leave anything blank. If somebody says, hey, leave this area blank, I'll fill it in later, that's a problem. Don't do that. Read your policy. I know it gets confusing, a lot of legalese, information there, but, read it as best you can. Call us if you want to go over it with us at our 800 number. And then also, I'm going to talk a lot about this, complete a home inventory guide. I believe that is really important to have one ready. So I encourage you to grab one. We have them online also, you can download, or you can, call us at 800 number and we'll actually mail one to you for free. So here's the meat of what I'm going to talk about today. At least half of what I want to talk about just in this area here. I'm going to talk about the insurance coverage and the limits because I think it's important to understand your residential insurance policy. A lot of folks, they understand it somewhat, and I think it's important for you to understand it because when you have it, you get that declaration sheet. That's probably the most important document that you have out of your entire policy. It's got a lot of different documents, but I would encourage you to go for that declaration sheet. It's a one-page sheet, and it's going to pretty much break down, or it's going to have at least the basic information here. It's going to tell you the types of coverages. So a basic residential insurance policy has dwelling coverage, has other structures, personal property, additional living expenses, which is also known as loss of use, liability insurance, and medical payments.
Peter, we questions come in, and thank you for being here to answer it. It says my insurance policy has a dollar figure listed under dwelling on the declarations page. Is this the cost that they will provide to rebuild my house, or what's the best way to make sure the cost per square foot that's listed on my policy will cover the cost to rebuild a house?
So actually, I'm glad you asked because we're going to go, if you can go to the next slide, we're going to touch on that in my presentation. And I'm going to ask the person if I didn't answer your question to come back at me, okay? Come back at me. Absolutely. So let's go through the dwelling coverages. These are the coverages I'm going to go through right now. The next slide actually talks about the dwelling coverage. So the dwelling coverage is the permanent structure of a home. It's the structure that is attached to a home. Now, kind of to partially answer the question, and I'll answer it as we go along, this one that just came up. The dwelling coverage is in many ways the foundation of the amount because a lot of the coverages are based on this dwelling coverage. Some coverages are 40%, some coverages are 50% of this number here. So in many ways, you will find that this dwelling coverage is so crucial. And this is, every policy is different, by the way, so I can't answer completely the question, as far as the individual question, because I'd have to ask a lot more questions, but let me explain a couple ways that it could go, how a dwelling coverage. So will it be enough to cover or rebuild a home? That's the question. It all depends, it all depends on what coverages you have. So if you have an actual cash value policy, it would only pay for the actual up to the policy limits or the amount to rebuild minus some sort of depreciation. So, and whichever of the two is less. So you have to understand the cash value and replacement costs. And then if you have a replacement cost policy, then you need to make sure and certain that it's, because there's different types of replacement, I guess, or you can say there's, they could be explained a little bit differently on the policy contract. So I would encourage the person, if you really want to go into detail about your policy, I would encourage you rather than guess, to go over it, have it in front of you, and then give us a call at our 800 number, and we can go through it and say, oh yeah, you have this type of policy, you have that particular type of policy. But I'll explain some more about the different types of policies and the different types of issues in regards to rebuilding your home. Let's go on to the next slide. So this is going to kind of help a little bit. A lot of people, and I've spoken to thousands literally of folks about residential insurance, and a lot of folks don't realize that even though you have a home that you buy in Arkansas, the exact same home built by the same builder, and you have that same home and you purchase it in Texas, it's going to be 300,000. Square footage is the same, materials is the same, just because you have it in a different location. You go to California, it's going to go between 500,000 to $1 million, just the same exact home. So you have to remember that when you're looking for limits, you are not looking for the value of your home. You are looking for what does it cost to rebuild this home? Okay, what does it cost to rebuild a home? That's what you're looking for as far as the dwelling coverage to set your limits. So you have to look at that and then look at the square footage you have, and then you would actually. I think the next slide might explain a little bit of that. I'm not sure if it's the next slide.
Okay, because another question has come in is how do I
Sure.
find out the current cost to rebuild the home in the Bay Area?
Yes, that's a great question. It came up in one of our previous seminars. So the way you find out is right here. So you in order to select the limits, the cost to rebuild the structure, that's what you're looking for. So you look at the square footage of your home. It is 1,500 square feet. then you want to talk to some contractors in your area, because contractors in different areas charge different amounts. They can charge 300 a square foot. I understand the Santa Clara area, especially up in Santa Cruz area, just right up there in that area. It could be up to 500 or more. So it really depends on what the contractors are charging per square foot. So the best thing to do is take your square footage, call a contractor, talk to them about your home, explain to them you have special material, granite and other things that maybe make it a little bit different. And that should give you a guide as to how much limits you have. Now, I will tell you, it's important that your insurance agent is also proactive. They have software that they run through, and they actually find, they will actually come up with figures. I mean, that's great. That's all great and wonderful, but I always like to trust but verify. And there is the responsibility of the insurance agent, but I would not depend, completely on what anybody says without being able to do some research myself. So that's the best. That's the best way to come up with, if your limits are within the range. I recently did a check on mine, and I was able to, just make sure they were in the ballpark, and pretty much the insurance company was within the ballpark. So they were fine. Actually, I had a little bit more coverage than I needed. So it's good to give yourself that room and make sure you're good to go.
Okay, great. Thank you. And another question has just come in. What companies are writing insurance in high risk brush areas like the Santa Cruz Mountains? Like, is there a way for them to determine, different agencies that they can reach out to?
Yeah, and I'm going to touch a little bit on that as we go along. But just a quick answer, we have a home finders tool, insurance tool. So there's actually a tool on our website, and it will actually allow you to check insurance companies that are writing in your area. So I encourage folks to do that. And also give us a number, give us a call at our 800 number, and we can also help you with that. And I'll give you some more suggestions as I go along. If we go to the next slide. I don't want to get caught up in not getting through this presentation, or, perhaps, and I want to answer these questions, and I will. If I don't answer them, come back to me. Other structures is any structure that's set apart by a clear space. So this is important because there are some bills that have actually allowed for you to take monies from this particular coverage, which sometimes people don't use because it's for fences and swimming pools and other things, and they can use it now and move it over for the dwelling coverage. So you will actually, since if you're limited on dwelling, you could actually move some of this money. So these are important things. Let's move on to the next slide. Keep me honest and remind me to come back to any of these questions, okay? Personal property, it's your personal things. Everything, if you could take the home and turn it upside down, basically anything that would fall out. I know that's a real general, but, just to give you an idea, that's considered personal property. Televisions, clothes, sofas, and that sort of thing. Let's go on to the next slide. Personal property, once again, it's based generally between 50 and 75 of your dwelling coverage. This is not an exact number because insurance companies use different numbers, but once again, that's why the dwelling coverage is so important. You start there, that's the foundation, and then many of the coverages, the additional coverages, are based on that dwelling. So it's important. Once again, get to that home inventory guide. I encourage you to fill it out. You can download it on our website. Insurance companies, when they get a claim, you could turn in, $50,000, and I've seen this happen. And then all of a sudden, 2 weeks later, you remember, oh my God, I had all this extra stuff in the garage, and I had stuff in the drawers, and there's another $35,000. And insurance companies, unfortunately, many times they look at that and say, oh, this is fraud. They just want to get the limits, whatever your personal property limits are. So, they just slows down the process sometimes with that. And of course, we're there. If you have that problem, we're more than happy to help you through that. But encourage you to fill that out. Loss of use, typically, once again, it's based on the portion of the dwelling coverage. It's not necessarily 40%, but it's, typically around 40% of the dwelling. It's for laundry, hotel, motel, breakfast, lunch, dinner, lease of house. When I was an insurance agent, I had one of my clients that had a kitchen, an incident in their kitchen, and they were so thrilled because not because of the fire, but because of the coverages. In this particular coverage, they didn't realize that, they weren't going to be able to use their kitchen, and they were able to get reimbursed for all their meals. So, they were really excited. They were able to go out to dinner and, not be bummed out, about, just having little, McDonald's. Nothing against McDonald's, but, they were able to sit down and have dinner and so forth like they used to. So liability, this is very important coverage, very important coverage. Claims against you, you get sued. This coverage is the bulk of what really covers you for these lawsuits. Injuries of non-residents, somebody gets injured on your property. This coverage is going to help you. Say somebody steps across a water hose that's in your front lawn or across your sidewalk. They trip and fall. This is the sort of thing that covers you for that. Damages caused by pets, bites. Please be aware that some insurance companies will absolutely not insure you if they know you have a certain breed. They will exclude, or they will exclude the actual dog, or they will say we won't insure you if you have one. So that's important to know about this coverage, liability coverage. Medical payments is important. This is for non-residents. No negligence is required. Example of limits: 10, 5,000. I've seen 10,000 and even a little higher, but not as common. This is, I had a person or a claim when I was an adjuster, and this person came from out of town. I don't remember exactly where they're from, but they came out of town and they fell inside the home. They were doing one of these pull-up bars on the door. As a matter of fact, it happened in Campbell when I was up in that area. And when they pulled the bar, it was a temporary bar, and they're trying to do a pull-up. And anyway, they fell on their back. They hurt their back. The good thing about this person, they were able to get medical payments reimbursed immediately. So it's important that that this coverage, it's helpful. If somebody comes from out of the country, they get injured, they don't have any medical coverage. Guess what? This could cover for immediate, maybe an ambulance, maybe a doctor visit. So this coverage is good. It helps people. Have a relative from, Mexico or from Europe or somewhere else, and they get injured. They would have that coverage. So there's different perils. Storms are covered. Earthquakes obviously are not covered. That's a completely separate policy handled by the CEA. At least the majority of the bulk of California earthquake insurance is handled by CEA, even though there are some smaller carriers that do and individual carriers that do earthquake. Flood is not covered also. That's something that's done through FEMA, the federal program that covers that. And of course, fire insurance. That's where it all started, fire insurance. We won't go into the history, but some other day. Next slide. So these are pretty typical covered perils, unless the policy indicates we don't cover, but these are pretty standard: theft, fire, explosion, smoke, and so forth, caused by aircraft. A good friend of mine had in Cerritos, I think it was one of the planes that landed on their home many years ago. I did back in the 80s. Luckily nobody was home, but it did cover for that. Next slide. I think these are the ones that are excluded: power failures, industrial pollution, water damage, of course, intentional losses. You can't hit your own home and expect to rebuild it, brand new, and if you did it intentionally and so forth. So anyway, these are some of the things, and you could see these on our website also. We have pretty typical on these. I like to talk to people about this building code upgrade. It's not automatic, and so I encourage folks to make sure that they have this coverage. Building code upgrade, because sometimes, building code changes from, 1 year to another, and, whether it's copper wires and different things. So it's important to have this coverage. If your house was to burn down completely, something could be, you could end up paying some of this out of your own pocket. Loss assessment is important to have, especially if you're in a townhouse or condominium or other things like that, because, and I'm going to mention the California Fair Plan in a minute. So these are important because you can end up with, end up paying thousands of dollars out of your pocket. I had a person up in Berkeley that came up to me after a presentation, and they said, luckily we had this coverage because we had a loss and the insurance did not cover the entire cost of the damage that was done. It was a common area, they call it common areas. So either park areas sometimes, the outside structure of condominium is not part of your regular residential coverage. So they actually had to they had to spread out the excess amount that was not covered by the insurance company. And it came out to thousands of dollars. And because they had this loss assessment coverage, the insurance covered this. So not only did the homeowners pay a portion, but their personal insurance paid for the loss assessment that was being, basically spread around amongst all the owners of the, that insurance homeowner association. Next.
Regarding the building code upgrade coverage, where is this usually included in the insurance policy?
So you would ask the insurance agents, listen, I'd like to have this particular coverage. I would like to have building code upgrade, make sure that it's included. So when I had it, it would have a bunch of check marks, and so sometimes, as an agent, I would ask. But some agents may not ask, and because it is an additional thing, you will pay a little bit extra. It's not much. I can't imagine it be more than $5 extra a month. And so, and it may be more, maybe $10, but it's not a lot to get this extra coverage. And so I encourage folks to make sure that they make sure they tell the agent, I'd like to make sure that I have this building code upgrade coverage. And especially if you're in a homeowner association, I would encourage you to get that loss assessment. That's where that comes into play if you're in a homeowner association. And so these are the two coverages I encourage folks to look into. What to do after a loss. We encourage, and I know that if you can go to the next slide, I'm going to talk a little bit about this, but I know that you guys, or the Santa Clara County Fire Department, is doing a webinar that talks really specific about mitigation. And I'm just going to talk from the insurance part, but I think you guys can talk a little bit more, and we'll talk more in detail, I think, at a future or past webinar that folks can look at. But basically, mitigation, these are the things that insurance company expect out of you. It's pretty much written in the policy. You'll look there, duties. Every insurance policy basically has duties. You have certain duties that you have to fulfill. And one of them is mitigation, minimize the exposure. You have a water leak, you should cover it. You shouldn't wait 3 or 4 or a week or a month, and let additional damage be caused to it, because then all of a sudden, a small damage could turn into something major. Insurance company could really get into it and start getting real technical and say, legally, we don't have to pay for this or that. And, of course, the department is always there, to help you through that process. But it's important to take some of that responsibility on your own. And so, it's important. Make sure other examples of mitigation, of course, are strapping loose objects, fire retardant materials, location of residence. Let's go on to the next section there. Ways to reduce your losses. Make sure you get renter's insurance, obviously, brush clearance, defensible spaces, clearing, trimming, electrical wiring, fire extinguishers, smoke alarms, combustible items. Let's get to the next slide. I know people are anxious to get some of these other questions, so let's get to those. Family evacuation plans, those are important. Emergency numbers. I'll keep emphasizing that home inventory guide as long as I live, I think. Next slide. Insurability in high-risk places, what landowners should know. It's governed by law. This is the important thing that people should know. Rates cannot be excessive or inadequate, can be higher for brush and wild fire areas, the high protection classes. Insurers cannot generally choose where they want to, insurers can generally choose where they want to write. Insurers must maintain eligibility guidelines specifically and substantially related to loss exposure, and sufficiently detailed to determine appropriate rating plan for insureds. So these are governed by law. Next slide. Continues, guidelines can include but are not limited to protection class, proximity to brush fire, slope, road access, mapping, evaluation system data, insurers exposure in area. Let's go on to the next slide. This is where we get to the FAIR plan. Yeah, there have been some additional things that have happened. The policies used to cover, FAIR plans used to only cover 1.5 million. Insurance Commissioner Laura asked them to increase it to 3 million. And so that's a nice little thing that it's happened with it. There are installment plans, so there's no fees. And then he's also asked FAIR plan to make it a comprehensive, because with a FAIR plan, it only covers the basic fire, and it doesn't cover what they call the wraparound, which is all the differences in conditions. So you have to end up getting two plans. And what the insurance commissioner has asked is that the insurance company FAIR plan be a comprehensive plan. Now, I can't really talk more about this particular area, but the FAIR plan has sued the insurance commissioner, and I'll just kind of leave it at that as far as that situation. But we're trying to update it. It's been kind of antiquated since 1999. It really hadn't been updated, and insurance commissioner Laura came in and made some adjustments, that really have helped it so far. Statewide standards for fire resistant structure or mitigated property. CDI is trying to establish standards. So right now, SB 190 and AB 338, the insurance commissioner is completely behind this. I'm sure the captain could probably talk about it. I will talk about it a little bit further on in the program, but there are these things are very important. So there's home hardening that's happening in communities, and these particular bills, SB 190 and AB 38, encourage that. And you just need to know that the insurance companies are not required, for rating and underwriting purposes to utilize that. They do in general, but they're not, there's no standards that are set yet. So we're working on that. There's hearings and so forth. The next plan, I don't know if this might be a good opportunity if I didn't touch on that fire plan question. Let's see if we can go back to it real quickly. We'll be covering information. I think that was it. If there's additional, let me know. So let me talk a little bit about AB. Let's see, which one is it here? AB A24. That's Commissioner Lara. Actually, before he came into the being the insurance commissioner, he was still in the Senate, and he authored this particular bill, SB 824. And it basically, when an emergency is declared by the governor, the insurance companies, he can put in a mandate or moratorium, which does not allow insurance companies to non-renew. So there's a 1-year moratorium that goes into effect once the governor declares that's an emergency, and then the insurance commissioner puts in the moratorium. So he's done that on 2 occasions and 2 years, and so it's really important.
Peter, a question.
Yes.
Why not ban insurance companies that refuse to write policies in certain zip codes from writing any policies in the state?
Yeah, that's a good question. We believe that, and this has happened in the past where insurance companies have, stopped writing insurance companies. They did that in the Oakland fires, and they've done it on several other occasions. We think it's important that the insurance, that it remained very healthy, the insurance industry. We haven't lost any insurance companies. Some of them have threatened to leave the state, but none have left the state. So we feel that the markets will balance themselves out. And so, we're really going to hurt the whole state by just banning them from selling anywhere, So just like in the Oakland fires, the insurance companies did come back and they started writing in that area again. So we believe that, that's a better way to deal with that. But that has come up before. But we feel that the insurance companies, and we're trying to find other solutions and other ways to deal with the insurance companies that aren't right in certain areas. Hopefully the mitigation that's done, these issues with, areas that have a lot of fuel and brush and others areas, these areas, the governor has there's some grants out there, and there's programs that are helping, remove some of that. And I think you guys may have talked about that, or the captain could probably touch on that a little further. But it's probably a better way to deal with it in a different way than just say, we're going to cut insurance companies completely.
Okay, and another question regarding the FAIR plan. Though we have never had a claim, our insurance company refuses to renew our policy. Now we are paying much more for less with the FAIR plan.
Yeah. So let me look at that real quick. Goodness. Yeah. So insurance companies can choose, to renew homes in an area, and they feel, sometimes they have concentration of policies where they believe the risk of loss is just too high for the risk model. So there's no law that dictates that insurance companies must write in hardened communities or highly mitigated homes. And so the insurance company, it's important that you understand that there are tools. So we encourage folks to go to that Home Finder, Insurance Finder tool that we have, and you can find a list of residential insurers and agents. So, it's important to look at it that way. We know that the FAIR plan is not perfect. The FAIR plan is, limited in what it's doing at this current time. But, with the enhancements, hopefully, that are coming, that could be something that will be beneficial for folks in the near future.
We have a couple more questions that have come in. My insurer said that they would drop me if I made my house a rental. Is this legal?
Okay, as far as dropping you because my house is a rental, is it legal? Okay, that's a great question. I would say it's you. I would encourage you to get your policy contract and go through it with a fine-tooth comb. Give us a call at our 800 number. I don't know if the contract has something in particular that says about certain times when you might not be able to do certain things. So I would encourage you, rather than guess exactly what it is that is happening there. But it seems something that needs to be looked at a little closely by our department. We do have a section in our website also where you can file a complaint. So if you feel that the insurance company has, unjustly denied something, dropped you for some reason, we will take a look at it in particular, and we'll ask the insurance company to actually put their position, not just from a manager's position or from, an individual office manager or, the adjuster, but actually from the company, and give us their legal position and give us, it in writing, so we know exactly what the insurance company is saying. And they refer to the actual policy language, which will actually detail in particular why they're denying some sort of coverage. But, on the surface, something doesn't sound right, I will tell you. But I would encourage you to, rather than speculate here on the details and without the letter in front of me and without the policy contract and so forth, I would rather say, give us a call at our 800 number. Everybody that answers the phone there is experts. You have the information in front of you. We may just open up a actual complaint for you.
Okay, thank you. And another question, is there a resource or a checklist regarding wildfire coverage, which we could use to evaluate the completeness of our own current coverage?
You know what? We have something on our website for auto insurance, and I'm not sure if we have it for homeowners, but if you go to you can actually go to our informational guides on the website, www.insurance.ca.gov, and we have a residential insurance brochure, and I'm going to it right now as we speak. But there's a lot of good information about the coverages. It talks about what is covered in insurance policy. Actually, it covers all the coverages that I just mentioned. And it talks a lot about these things. It even talks about the FAIR plan, the National Flood Plan. It talks about cancellations, premiums, refunds, tips, and so forth. So I encourage folks, and actually I just put in, as a matter of fact, I just made changes to the website myself today, and there is information on the online tool finder. So I encourage folks to actually go to that, and they can use that as a tool.
Okay, great. And then back to the other question, what companies are writing insurance in high fire risk areas? You said to use the tool on the website to locate
Yes.
those companies that may be insuring in those areas.
Yeah, so you could go to that, our website, our tool finder. I will say this, we've heard testimonials for a while now that some folks have, like, for example, San Diego, they, exhausted all the insurance brokers and insurance agents, insurance companies, and they couldn't find insurance there. And what somebody did is they called from San Diego to LA, and they called a bunch of agents, brokers in that area. And they found some agents that were actually writing for San Diego, so they were, because, not every insurance company, you may not be looking at the right agent, and you may just be saturating just all the agents in San Diego area, and they're absolutely not, going to write anything. But sometimes if you go out of your county or your area, you may find an insurance agent or a broker that has a company that they're writing under, they're actually appointed under, and they will actually help you. And, so that's a great way to do it also. But our tool finder is a really great tool.
Okay, excellent. Another question, what's the difference between actual cost value and replacement cost in my insurance policy?
Yeah, so I like to explain it in a really simple term. And so actual cash value is the actual amount to replace the item in dollars today, but with depreciation. So you take the example of a $1,500 sofa, beautiful sofa you have there. It's a sleeper sofa, leather sofa, and you bought it 10 years ago. And guess what? It burned and fire. And so now the insurance company is saying it's, you have actual cash value coverage. So you were going to deduct from the $1,500 or the actual, the amount to replace it minus the depreciation, which should be reasonable. And so they will deduct a certain amount of depreciation for every year that it's been. Sometimes insurance companies will not take 10 years of depreciation at 10%, because obviously that would be 100%, but they'll take, a certain amount for every year, and they'll come up with some figure. And then replacement is actually, for the most part, and you need to check your policy as far as, dwelling coverage or your residential insurance policy. But for the most part, it means they're going to replace it. They'll be able to replace it. Like in the example of the sofa, they would basically replace it with whatever is needed to be replaced as far as the same sofa. Like, kind, and quality is the term that is used in the insurance industry.
Okay. I looked at my policy, and for contents, I have replacement cost. Does this mean that they receive money for the cost to replace my items, regardless if I actually replace them?
So it would be, and sometimes insurance companies will say, okay, this is how much it is to replace it. And if you show us the receipt, then we'll give you the difference, So, they may come up with an estimate of how much, it was to replace the item. And then if you show them the receipt, they would pay you the difference. But yeah, replacement cost basically is the amount to replace that particular item in today's, like I use on the sofa. If it was a $1,500 sofa, you're going to pay $1,500 again. Then they would replace it with a $1,500 sofa, or similar, like kind, and quality. You got to remember. So if you can't find that $1,500 sofa, maybe you can find that one for $1,800. Then you can tell the insurance company, hey, it's $1,800. And of course, once they see the receipt, they may go ahead and pay you the difference that maybe they didn't pay you in the beginning. So yeah, I should pay for the full amount. Okay,
great. And then do you actually need receipts, or can somebody just go and videotape like all of the contents that they have in the home? Like, what's needed in order to submit a claim?
Yeah, so and that's a really good question. So it's not after disaster, we're really want to be sensitive to this situation. So we definitely don't want to exasperate the situation for a homeowner. So many times the commissioner will actually ask the insurance companies, hey, just pay. He's even asked up to 100% when it's a total loss. So that's things that he requests insurance companies. And most insurance companies will do that when it's a major disaster, it's a declared disaster by the governor, or, so, I encourage people though, because you never know, it might not be a disaster. It may be just your individual home or just a few homes. I encourage folks to have that inventory guide, and that's that inventory guide, and to fill it out. So the insurance companies they're not always going to ask, they're not going to ask for receipts. And, but it's good to have that in case, you never know, you might have one of them that does. When I was an insurance adjuster, I did used to ask for them, but things have changed since 1987. Back when I was an insurance adjuster, and the Department of Insurance is really sensitive to that. So, we don't like them to have to fill out these tedious forms and so forth. So there's new, regulation that stops a lot of that. So.
Okay, because another question was, do you mean receipts for what you bought or receipts for the new item you purchased? So
right, yeah, that's a good question. Actually, I was gonna say, yeah, you should probably we should show the difference here. So what I encourage people to do ahead of time is to take pictures of your home, and then put because the inventory guide, you should put either video or camera, or upload something to the cloud, and just have everything in one place, so that if the question ever comes up, then you can present that. The other question is with regards to after a fire and you lost everything, and then you need to replace items. And at that point, that's when an insurance company can ask you for receipts, because they need to know the difference between, what they paid you initially and then the actual cost to replace the item. So those are two separate things. That was a good question.
okay, thank you. Another question. I have insurance on my duplex in San Francisco, but there is also an illegal in-law in the building. Will my insurance cover the illegal in-law?
I'm not sure what illegal means as far as in-law, but as far as coverages, there's no, the insurance companies don't look at that sort of thing, and it could be, I don't understand the question as far as illegal. So, probably have to clarify that. But as far as I'm concerned, as long as, there's nothing that's, somebody's doing something intentionally and damaging something, anything like that.
Possibly like somebody put up an in-law unit but didn't get permits from that city to build that unit. And so is it covered under, or is it covered? Can it be covered through an insurance policy?
Oh, okay. Well, then for the purposes of underwriting, an insurance company would need to know that. So if there is something that was built on the property that was not done with building codes, then the insurance company could have questions later on, and it could come up that, hey, we saw that a lot during the 2007 fires and 2003 fires. That's how far back I go with the department. And we were seeing a lot of folks that had actually built on additional square footage, and that was never reported to the insurance. So there was a lot of problems with that. So, if there's additional, things that are built onto the home and it's not reported to the insurance company, it's very possible that it's not going to be covered, just so you know. And of course, if there's some doubt about it, call our department, and we can, if you have a complaint about it because, it's not being covered, we can take a second look at it. But the policy contract is pretty much going to be stating that that's not going to be covered. So it's pretty standard.
Okay, and somebody did check out the tool, but Los Gatos or Santa Cruz wasn't part of it, but we just put in the chat to have them contact you at the 800 number.
Yes, please. There's further or more up-to-date information at our 800 number.
Okay, yeah, and for all of you that have joined us this evening, we have placed quite a bit of information in the chat field. So, and you should be able to click on those three little dots on the very bottom right-hand corner and save the chat. But also, the information that was shared this evening will be included on a resource list, and we will go ahead and email out that resource list for you after the program. So, if you're unable to save it or you can't access your chat, don't worry. We will be in contact with you with all the information mitigation that we're covering here this evening. I do have another question for you, Peter. When I look at my property on Google Earth, it looks like I have no defensible space. Google Earth cannot, quote, see that my trees have been limbed up 30 feet. How do we stop the insurance companies from making decisions based on satellite providers' interpretations of my property without even visiting it?
Yeah, so they use different scores, insurance companies, and different models, these fire scoring models. And it used to be before they would take individual home and rate it based on that. Now they're looking at these different things. So, just be aware that, and I'm sure that the captain could talk more about this, how the scores work. But, it's just essentially the best thing to do is just do the best you can in your area. And, we are looking at ways to, to get insurance companies to be a little bit more considerate of the mitigation that's been done in communities. So, we've had hearings. We continue to work with insurance companies, talk to them. I will tell you, I did talk to a gentleman back in 2019 in Ben Lemond, I believe it is. I think that's the name of the city, right up in Santa Cruz. It was there was about 150 people there, and he told us all, actually, all the people in the room. He said, I talked to my insurance company. They canceled me. And then I went back to them, and he went back to them. They kept canceling him. He kept going back to them and making the changes they requested. And he was able to stay on, and he went back and forth about 4 or 5 times. And so, we encourage you to find what, as far as that, look for ways to work with insurance companies. As far as Google and what they're doing as far as satellites, we're working on that. We're doing hearings. And hopefully we're able to, get something resolved here. So,
Captain Murphy, do you want to add?
Yeah, sure. So, Gina, could you just repeat the question? Because I wasn't sure I quite understood what you were talking about with respect to a scoring mechanism.
Yeah, well, sometimes the insurance companies will use Google Earth to hone in right on an address to see if they're, mitigating their properties. And so it was like, well, how do we prove to them that we've done what we've done, or have them, besides having them actually come to the property itself if they don't do that.
Yeah, so I can't speak to, what specifically an insurance company would use to score a property. From a fire prevention standpoint, all I can do is really, emphasize the need for people to create defensible space. That 0 to 100 foot area of land between the structure and the wildland areas, reducing fuel, and then creating that ember-free zone in that 0 to 5 foot area directly around the structure. Now, unfortunately, I'm not aware of any program with insurance companies to date that provides any kind of recognition of that defensible space. And I think that Peter mentioned a couple of legislative efforts that are currently underway to develop new standards with respect to home hardening and defensible space. I think that those, we know that defensible space makes homes more defendable from fires. We know that creating defensible space increases the likelihood that your home will survive, whether or not there's a firefighter stationed at your house when a wildfire comes through. Speaking just, anecdotally, the insurance companies are making their decisions based on risk, and creating that defensible space reduces the risk. Unfortunately, from a firefighting fire department perspective, our focus is on trying to prevent the fire from starting in the first place. Working with the communities that we serve to reduce fuel where we can, educate homeowners on creating that defensible space. But we don't, unfortunately, really have much control over what the insurance companies are doing from a risk perspective. The only other thing I would add is, for Santa Clara County Fire Department and the areas served by Santa Clara County Fire Department, we undergo a process every few years. It's conducted by an agency, which is actually a private entity. It's the Insurance Services Office. And they provide what's called a public protection classification. And all fire departments typically in the state of California undergo this review. And the purpose of it is to provide a rating that insurance companies then use to establish risk for a given area served by a fire department, which has a direct correlation to the premiums that they charge. For the areas that we serve, we are a PPC2, and for the rural areas, a PPC2Y. Those are the best classifications that an agency can receive relative to the risk profile and the premiums that insurance companies then charge. So in other words, a 2 is an exceptional rating and gives you just about the best premiums that you can get from a homeowner's perspective. There is a 1 rating, but the amount of investment required relative from a 2 to a 1 doesn't justify itself, doesn't have a corresponding benefit in premium. So again, county fire, all the areas that we serve fall within that PPC2, and the rural areas fall into 2Y. And we're actually undertaking that process, have started again. So our classification is currently under review again. Sorry, long-winded answer, but I think that kind of helps answer some of it.
That's helpful. Thank you.
Excellent.
Let me just come back here. And Peter, you might want to just touch on this, but some of Commissioner Lara's priorities and accomplishments can be found on the website here.
Sure. Yeah, just go out to a website and see some of the things that we're doing and we've done. So I think it's important.
Okay. And then also following up on Captain Murphy about hardening your home. Thank you for bringing that up, Captain Murphy, because we all know it's important. We do have on our website, and this link will be placed in the chat as well, shared via the resource list. But if you scroll down here, we do have another wildfire preparedness workshop coming up in July and August, and it's called Reducing Wildfire Risks in the Home Ignition Zone. And as Captain Murphy has just talked about briefly, is right doing what we can to prepare your home in the event a wildfire does come through. And so this particular workshop is going to really focus on that 0 to 5. So coming from your structure of your home to out 5 feet, what can you do to harden your home to give it a best chance to survive a wildfire? And so the link is right here. It's a direct link. All of our classes are listed on Eventbrite. And so if you're interested, you can read about it and register for it and bring your questions again, and we'll be more than happy to do what we can to answer it. But again, all of our upcoming programs and services are listed on Eventbrite, and you can find that there. So I just wanted to, and again, that's going to be shared in the resource list. And also on this list, if you continue scrolling down, these are where our recorded webinars, the previous ones, and some of you have attended them, so thank you for joining us again this evening. But we do have a Ready, Set, Go webinar that's been placed on our website that took place on April 27th. And then just 2 days ago, we did a Recovering from Wildfire, where we actually had 2 guest speakers present and share their own personal journey and their stories. One was evacuated and one sadly lost her home in the CZU fire. And so you're more than welcome to review these. And this insurance webinar that we're completing tonight will also be put up on this website. So if you know somebody who wasn't able to make it or join us, then you can share this link, and this information is presented there for you. Let's see. So I just going to check really quick to see if we have any more questions in the chat here. Let's see, any more questions here? No. I think that's all then, unless I just don't want to miss anybody. Thank you. Oh, we're getting some thank you. So thank you again for joining us this evening. We certainly appreciate your time. And again, if you can share the upcoming webinars with maybe your neighbors or even other family members that could benefit from it. We'd greatly appreciate it. So thank you again for joining us. And Peter and Captain Murphy, I don't know if you want to just say a few last goodbyes, and then we will end this webinar.
Hey, thank you guys very much for having us. And please refer to us, give us a call at the 800 number or at our website. Just, we're happy to help.
Yeah, I just like to thank Peter again for joining us again tonight. One of the things you'll hear a lot of us mentioning with respect to the wildfire problem is this isn't a problem that we got into overnight. It's a problem that unfortunately is years in the making, and the last several years of hot, dry weather has just really put us in a very difficult situation. And we understand, people's concern, especially relative to the insurance within these high fire hazard areas. I shared the other night, I myself live in an area that's, designated as a high fire hazard severity zone. We're your fire department. Our goal is to work and do the best job we can to prevent the fires from starting in the first place and to work to reduce the threat. The things that we're doing to do that, one, are creating partnerships to keep our community educated. Tonight's partnership with the Department of Insurance is a good example of that. But we're also focused on ways to reduce the fuel threat, implementing new technology to hopefully predict and communicate more effectively when a fire does actually break out, and then making sure ultimately that we're prepared to respond when we do have another fire. And, unfortunately, it's not a matter of if, it's a matter of when. But that's why, again, these webinars are so important. And we really require the most important partnership of all is with the communities we serve and making sure that people are prepared. So thank you very much.
Okay, excellent. Thank you, Captain Murphy. And thank you, Peter Mesa, for being with us this evening and sharing your wisdom and your knowledge, and all of you who joined us. One last thing is you will receive a link to a feedback survey. If you could just take a few moments to complete that feedback survey, it really will help us continue to improve our programs and services, because when we work together, right, we're stronger together. So we are here for you. If you have any questions or you need further information, please reach out to the Santa Clara County Fire Department, and the contact information has been placed in the chat, and it will also be included in the email. So again, thank you so much for joining us this evening, and we hope to see you at the upcoming webinars that we have. So check out Eventbrite. Everyone have a great night and be safe.